Hello and welcome to Last Week in Finance. Today is July 11th of 2021. Let's start with the numbers. The S&P 500 0.40% up prior last week. Right now the S&P is at 4,369 points. Although if you see that number you think, well, another boring bullish week. Well, you had something else coming. More on that later. The DXY, the US dollar index, flat. It lost 13 basis points. Right now, the DXY is at 92.10. Gold with a mini bullish trend and went up almost 2% for the week. Gold right now, the ounce of gold it's over the 1800 threshold. Right now it's at $1,808. Silver slightly up. Right now silver it's at $26.19. Copper, Dr. Copper, actually bullish for the week, 2.36% up for the week. Right now, the pound of copper is at $4.34. We will keep seeing this bullish trend on copper. Well, I don't know, is very likely. The WTI, the crude oil, a little bit sluggish for the week, minus 44 basis points. Right now, the barrel of crude oil is at $74.63. So shy of 75, and we will see by the beginning of the year, by the end of the year, I'm sorry, $100 barrel of crude oil. The 10-year Treasury bond down, way down this week at $7.70, 7.7%. I'm sorry, down for the week. And some point in the week, way down. Right now, the yield of the 10-year Treasury bond it's at 1.360%, and a little bit more on that later. Bitcoin, slow week for Bitcoin, 2% up, and right now, Bitcoin it's over $33,000. It's shy of $34,000. Ether, actually, little movement, 0.93%. Right now, Ether or Ethereum, as you wish, is at $2,108. And not a lot of movement on cryptocurrencies. There are maybe in an accumulation phase, or they're gonna go straight up or straight down. I don't know. I'm not gonna forecast that. Now, the main issue this week was this big sell-off of the S&P, and more accurately the S&P futures in Wednesday evening, late at the night, and Thursday. We saw that and started on the Asian market. Way down the S&P futures, but also the major indexes. First in Asia, the Nikkei went down, took a hit, and then prolonged it into the European market. That was maybe in the morning, very early in the morning, late in the night on Wednesday, early Thursday. And then that extrapolated to the European market, and that's how we got the opening of the market in New York on Thursday. It was a huge sell-off. Market lost around 50, 60 points, give or take, and everybody thought, oh, this is it. This was a huge sellout, this is the beginning of the end, but it wasn't the case. At that point, the the 10-year bond, the U.S. Treasury 10-year bond, also had a lot of movement, and at some point, the yield of the Treasury bond, the 10-year Treasury bond, was on a very high level, 1.280%. Of course, at the end, it traced back and went up to over 1.3%. Of course, first, of course, it wasn't a sell-off. By the end of the week, the S&P recovered not only that loss, but it managed to pull a close to an all-time high record. And what we have here is maybe the market's a little bit shaky. It wasn't the big sell-off that that many people is expecting. Maybe we'll have a bull market forever. Maybe, I don't know. I mean, every now and then we are due right now of a big correction. I'm talking at least 30%, at least, very least. But when the Fed is gonna keep tempering the markets, and maybe we're gonna have these situations every now and then, very likely. Now, talking about the jobless claims report, they were higher than expected. There were 373,000 new jobless claims in the US, way over the 350K that was the expectations. Of course, that also helped with the bearish market on early Thursday. Now, the big news of the week is the G20 agreed to a global minimum tax rate of 15%. The G20, these big shots, United States, Canada, European economies, Japan, you name it. Now, how this is going to affect? First, it's not a done deal yet. They agree they're going to sign this thing, the global minimum tax rate, on the G20 summit in October. So it's not a done deal, but it's very likely. Of course, first of all, this is stupid because what you can start a company outside of a G20 jurisdiction. So you can go to Cayman Islands, the Emirates, mm, maybe some country in Southeast Asia. You can go to, I don't know, Seychelles Island, Panama. So many tax haven jurisdictions there you can open your company, at least move your company over there and put the main headquarters. Although this is gonna affect companies maybe like these big tech companies like Apple, Amazon, Google, you name it, and many other. This is not just a tech company scheme. For instance, that Apple has their main subsidiaries in Ireland, so that's where they're able to basically pay virtually no tax at all. That may affect Apple in that regard, and we will see. I mean, these guys on the big fours, Deloitte, PricewaterhouseCoopers, they're very creative, so they'll be okay. They'll figure out something. Also, the Fed, well, this is not news at all. They're announced they're probably gonna taper the markets, but they announced they're very likely, most likely, gonna do the taper on the mortgage-backed securities. Right now, the Fed is buying regularly 40 billion US dollars on mortgage-backed securities. One of the reasons that the real estate market is very propped up. So apparently they're not gonna do the tapering on U.S. Treasuries, but they're gonna do it on mortgage-backed securities. That will start to disinflate a little bit the U.S. housing market. Now, talking about the U.S. housing market, I was reading Taylor Morrison's CEO statement that says the US housing shortage will be around for years to come. Right now, there is around between 5.5 and 6.8 million housing unit housing unit shortage in the United States. So, well, the last reading I had it was around 4.5. So, well, this guy says that could be close to 7 million, and it's not far-fetched to think that. So, what do you think is going to happen with the housing market? I'm going to leave you guys to answer that question. Well, that will be all for the week. Thank you very much to listen to Last Week in Finance. I really appreciate it, and we will see each other next week. Bye bye, take care.